Did you get consumed by zombies or something?
No, we all decided
like,
to go to the toilet.
Yeah, I can hear a sound.
Was that me?
I think it was. I don't know. I
There's
heard
no way it's
flashy
Dave
sound.
because he's very far from the toilet, but it sounded like him. It must have been me.
Oh, is my mic still working? Like, did it switch
Yeah,
to
it's still
my...
working. We heard a toilet flush, but I can't determine if
Yes,
it was
we
me or if it
can-
was you.
Chuck, can you hear me? Chuck, Chuck, Chuck?
Yeah, we can hear you. Yes. Yes.
Oh, you know what? I think I didn't switch my mic.
We can hear you,
Uh,
and we could hear the toilet flashing sound, and it was very clear.
Oh,
It might have been
I
me,
must have
though.
not changed my input.
Oh, it was Dave. Okay, so
It
we
was
heard.
me. I didn't
We
change my
basically
input to...
we were listening to Dave pee and flush because the Bluetooth was still connected, so it wasn't me. I was like, "There's no way my mic could
No,
pick
it
up
was
the
me.
toilet," but we were actually in the
no,
toilet with Dave this whole time. Hey, barbarians, and welcome to episode 15. It's been a hot moment since we've done this. I think probably 2-3 months have passed. One of us is missing. Sorry, go ahead, Jürgen.
I think it's more than that. It's been like 4 months.
I think it's more.
and,
4 months?
Yeah.
4 months. Oh yeah,
It's
you're
four-
right. Yeah,
it's
yeah,
4
yeah,
months.
yeah. 4 months.
It's 4 months, and so this reopening is really hurting LLB as well as it's hurting C, right?
Oh, okay, yeah. C stop.
Yeah.
Okay, that was really.
Smooth, real smooth.
I was trying to follow that, but okay, I got it. Yes.
I remember that we were saying that okay, let's do it, but then people started traveling. So for us we
Yeah.
started recruiting. I think we doubled our team in the last quarter. I think Andrew is like on the road nonstop. I think Dave has been on the road. I think Alex, you have been on the road as well. So
A little bit.
So we actually, I think we caught up face to face once, but and initially we said okay, let's record a session back then, but then it just
Yeah.
became a random chat.
Yes, you're right.
Yep, that's right.
Yeah, a few months ago was a bit weird time for me personally, and then I did go on the road for about a month. July was a crazy travel month. Finally back, settled down, and back in a good routine. Mental health, getting there, getting where we need to be. I don't know if we need to go into any of that nonsense, but yeah, it's. I think finally getting organized, and I think a lot has happened in the past quarter plus. Like I just every day I see the Momentum Works group chat blowing up, and there's actually a lot more lively discussion. I don't follow any of it. I haven't been following the news at all, and it's been glorious. Just really been focused on my work lately, and hopefully get back to getting on rails with creating content again. Dave has been also extremely busy, very different from last year's pace. Every time I'm in the office now, this guy is just, I don't know, he's deep in decks and content and putting things together, having meetings. So this guy's been working like crazy too.
So he
work
doesn't
now.
play games anymore.
Once in a while, but not as much. Maybe like
Once a week.
Yeah, I mean,
once a week. Once a week.
like once or twice I've been to your office. They've always glued to the screen playing some game.
That was last year, Dave. This year, Dave is very focused, and I don't know what happened.
I think last year was focused as well, just focused on different things. But anyway, yeah.
Yeah, I decided to get serious again, and my sabbatical's over.
Yeah, I think that's about right for everyone. The only person who's been nonstop grinding is Jan Gan, actually, and he's actually ramping up. So, yeah, man, how does it feel to be back where you were? A few years ago, you had the same team size, but now I think it feels it's more purposeful. It feels you have more clear direction, and you're building a lot of new revenue streams, right?
Question for me.
Yeah.
First, having a company that's cash flow positive, that's profitable, feels really good.
Congratulations,
Because I think all these years
Congratulations.
Yeah, thank you. All these years we've been sort of running on investors' money and the different ventures we've done.
You're doing month to month, man. I don't know how you did it for so long. It's just insane.
No, we had ventures, we had investors putting money with us, and and of course there was a small core team which was running on our own payroll, but by and large we're not feeding ourselves, and we always raising investment and for different ventures. So kind of kind of, I mean, now if I look back, it was kind of lucky that that first we sold our main venture right before the pandemic, and second, the pandemic happened, which prevented us from jumping back in to build another venture. So we took a break, but also got time to reflect. And I think as of now, I mean, building a company that's sustainable, that's profitable, that's I mean, it feels really good. And second, I think I've never seen such talent density in the team that I've been leading. So just
Well,
to
that's a
give you
huge difference, right?
just give you some flavor. So we have a small team now dedicated to Web3 research, and the girl leading it is astrophysicist. I mean, or was astrophysicist, and the girl leading. I mean, you know Vion, who is leading
Yeah.
the insights and all the reports that you have seen that were published, and she's BCG alumna, and we are starting an investment team that led by someone who had 2 years investment banking experience, 4 years BC experience, and graduated Cornell.
Very good. See, you are getting the right people to operate things independently, it seems, so you could free up some time to do other things.
I thought so as well, but
You're still busy.
I still try to get my hands everywhere. So I mean, it takes some mental adjustment to let things go. Yeah.
Yeah, cool. All right then. I don't know. Do you want to move on to the news?
What that lot of things happen. What news?
Yeah.
know, man.
Are you
Three-
Are we
three-
doing that? Or are we doing like a personal update thing? Are you gonna give us personal update?
Oh yeah. Oh, sorry. Yeah, we didn't let you talk, Dave. Why don't you let us know
No, I don't have to
what
talk.
you've been
I'm
up to?
curious
No,
about-
let's. You want to hear more about Jangan?
Dave, go
I mean,
ahead.
I guess the question is like, okay, so now that you have like a profitable business and you don't have to worry about payroll and all these things, where do you want to take it, Janga? Like, where do you want to be in the next couple of years? Like, where do you see
I
yourself
think
going?
I mean, so we do have I think three revenue streams at the moment. So we want to stabilize
Yeah.
that, and then we want to just grow that to a certain extent. And I think in all three areas, we're working with clients, and so far the feedback has been good. But of course, so things could happen, right? I mean, the team is relatively new, and they're just getting to some kind of specialization. So we have team leads for each team, but they've been only in their role for like the last I don't know 2-3 months. Before, I mean, I'm still trying to gradually sort of take myself out of some of the day to day, but I think at least for the next half of the year, we want to get the revenue streams a little bit more scaled, but definitely stable, and so at the same time we can take some risk.
Well, that's kind of crazy because you've kind of gotten this clarity and ability to kind of pivot and restructure in the past probably this year, right? Because before that, I remember you were going through a very rough phase where there was like you were running, you were surviving, like that, like that transition, and I think that's very hard to do while you're still building a company. So like I don't know, how did you get to that point of clarity and change to become a profitable company, right? That's just, I think most people in their entrepreneurial career probably don't even get there. If I'm saying by and large, right?
I think a few things that we started doing and they were not showing the results, right? Or we didn't know what kind of results we wanted it to show. So for instance, I mean, last year we published 19 free reports that we want, I mean, that we used to pass the industry and share with the audiences and the ecosystem. Initially, we really didn't know why we're doing that. But certain things that, I mean, if you keep doing it, if you keep doing it well, if people keep giving you positive feedback, and if every time you try to do it better than last time, I mean, at some point in time, people are going to notice it, and people are going to come to you for business opportunities. This is, I mean, all the three revenue streams that we have at the moment actually came about during the pandemic. So it's basically people noticing us, noticing the work that we have done outside, the sort of the free stuff that we have dished out. And they start discussing opportunities, and of course, I mean, there was quite a bit of learning as well. So especially on the consulting and advisory part, and now I think now we have a much better idea of who are the clients we should be engaging, and who are the clients that we should say thanks but no thanks.
Yeah.
So yeah.
Looks like Dave's thinking. He wants to say something. We're gonna
No,
leave
no,
out
I'm just
something.
no, I'm just. I mean, like, are you going to? But do you want to stay as like a, I guess, a client service? Like, do you want to stay as a services business?
I think so. So one thing uh, that I'm thinking at the moment, or actually I've been thinking for a while, is that regardless of what kind of risk you want to jump into, having a business on the side with stable cash flow would help, because that when you are jumping out to take the risk, you are much more at peace with yourself.
And then it's just about managing the risk and the correct the bet sizes. You're just scaling it to the opportunity, right? So then it makes way more sense.
So for instance, I mean, so if you look at the business we have now, and it has not been capitalized, and I mean, the reason is simple, right? I mean, if we had, for me, at that point of time,
You have to give more
sorry.
context, I think, right? Because I think most people don't know what you did start and what was it, I guess.
Yeah, exactly. Maybe just start with explaining.
Dave's a little lost. I know what you're talking about.
Okay. We started as a venture builder. We were building a number of things, and initially some Chinese gentlemen, exit entrepreneurs, gave us some money to play around, and of course rocket background that I had. So I said, okay, why don't we just build a few things, tinker with a few things, and so we followed that path between 2018 and 2019, ups and downs, right? Because we try to manage multiple ventures at the same time. If you are really in a builder role, so you are ultimately responsible. I mean, no matter how good the CEO you brought on board is, unless he owns like 70% of the company.
Yeah.
Otherwise, I mean, they're not. So otherwise, the biggest risk and responsibility is on you. So we did that for 2 years, and we're kind of fortunate to be able to sell a company right before the pandemic. So I mean, it was a decent return. It was not fantastic. I mean, it didn't make me rich. So but it was decent return for us to at least to be able to keep the core team and spend a year to figure out what to do next.
It means you never distributed capital back to the investor, though, right?
No, I mean, so that company has other shareholders. So basically, whatever that was due to the other shareholders, we distributed. But whatever that's due to us, we're the second biggest shareholder. So whatever was due to us, and we just use that capital. Yeah.
Okay. So just reinvested, basically.
Basically, yes. Yeah.
But then you were making a point about the new company you're building, a new venture you're building now, or was that separate?
I think we are looking at how to capitalize the understanding, the operators' experience, as well as the community we have. Of course, there are different ways which we could do to do that. We could start a fund, but we could also become a broker, or we could become, some other outfit. Exactly which way will lead to ultimate success, I don't know. But I think at this now we are in a position where we can say that, okay, we're going to try 3 different directions, and for each direction I'm going to have a small team of 3 to 4 people, and they are going to take ownership, and they are going to be a sort team, because one thing about Southeast Asia tech as a market is that you don't know how big it is, you don't know how the ceiling it is. And of course, different people have different opinions. Investors based locally are generally much more optimistic than I am. But I take a realistic approach about what we can do, and take small risks, and while at the same time keeping some cash flow on the side.
Yeah, makes sense.
Yeah, sounds like a good plan. It sounds like you started off with having a lot of optionality. You kind of narrowed it down to a few revenue streams. That's finally making you cash. And then you're trying to, again, keep optionality open to pick the part where you want to make bets, I guess. So then it's just a matter of getting the data points in, and eventually to the point you'll probably narrow down to the thing that's probably making you the most money with most effort and resources. So it's a very interesting pattern, that the kind of business model to where you've gotten today, so.
And I have to tell you something. I mean, nowadays when I look at the team, so when I was looking at the payroll last month, and of course, in Singapore on the payroll, we have everyone's like ID number and stuff. Like, gosh, 99, 99, 99. So a girl who has been working with us for 4 years, and she was born in '97, and she said, "I feel old."
How does that make you feel, Jangan?
I feel, I mean, rejuvenated. I mean, there's lots of energy in the office, definitely.
Yeah.
And a couple of weeks ago, we told the team that okay, let's do a team building exercise, and I think three people in the team decided to completely build a storyline for a murder mystery. So we spent half a day doing a murder mystery in the office with full
Wow.
decoration and stuff. And it was fun. And they came back the next day to clean the office and rearrange everything. So that's kind of energy that we're talking about.
Maybe that's the trick, Dave. You gotta surround yourself with younger people to stay younger. You gotta absorb the youth.
No,
Doesn't
it's a hard
sound
task.
particularly right, but yeah.
Yeah, a hard task for me. I don't want to
Wait,
handle
wait,
a bunch of
wait.
18-year-olds at a club.
Can we start interrogating Dave now, or it's
Yeah,
always on
go
me?
Yeah,
ahead.
you can, you
Go
can
ahead,
interrogate,
go
interrogate
ahead.
all you want. What do you want to know? Interrogate away.
What has happened? What are you busy with nowadays? And
Oh God,
how,
so many things.
how's your
So
how's your perspective about life evolved in the last quarter?
That's a great question.
so
That's a great
I'm actually
question.
I'm actually trying to pare down my my portfolio a little bit and like get myself out of some positions that I don't want to be in anymore. So I think I spent like 2 months this summer trying to facilitate a boardroom coup.
Game of Thrones style.
Yeah. I don't want to get into the details of what the company is because I'll probably give away too much information. But basically, just these things have been on my in my books for a long time, and it's just kind of been stagnant. And I think it was just time for changing leadership, new ideas, and honestly, someone who's probably a bit more motivated. But stupidly, there's also a lesson for me. Is like when I just didn't spend enough time with this person at the time, like when I did the deal, and I feel like if I look back on my trajectory and like which of the companies that I've invested in have done the best, it's typically the ones where I have the best gauge of the person and I've spent a
Yeah.
significant amount of time getting to understand their character,
Yeah.
their work ethic, what they're good at, what
Correct.
they're weak at, and whether or not you can build teams and scale. And this one, part of it, I can make a bunch of excuses. I could just say like, the check wasn't that big, I didn't care as much, but I just basically didn't do my homework. And now, 4 or 5 years later, I'm sort of like, it's much harder to go back and try and clean up the mess than it is just not having made the mess in the first place. And so part of this is also an exercise in sort of reconciling with myself the fact that this is probably a lost cause, and I should try and do something, at least on my end, to say that I try and salvaged the operation. But I think that's mostly for me a coping mechanism than it is anything else. And I just need to make peace with the fact that I'm not getting that money back, and that's okay.
Yeah.
So that's been a life lesson, right? Just there's no shortcuts.
Yeah.
I mean, people say all the time, but moving through your homework.
That's tricky because, I mean, early stage, I think you're right. Typically, if you have a good relationship, you know the person, so that's a big de-risking element. But, if someone comes to you with the traction, like Mark Zuckerberg comes to you with the napkin of the trajectory of users, right? The traction looks good. You would assume that's probably from work ethic and hard work. So it's a little bit tricky, right? Because people can always say, like, you always can prove everybody wrong with the traction. And at the time, probably when you invested, the traction looked good, right?
That traction was
So,
great at the
yeah,
time.
right.
Yeah, that was
So
that was my heuristic. Exactly.
Yeah, I think that's a very good probably learning, right? It's like, even if the traction looks good, doesn't mean it's going to stay that way. And then the question is, what is missing to continue that traction, right? And that's I guess you're talking about the homework part there, right?
Well,
Isn't
it's
that
also
disclosure of
understanding.
every investor saying that past performance is no guarantee of the future or whatever?
But that's how everyone
No, but it was
operates in this
traction for
industry,
this
right?
particular business. It was traction for this specific business, right? And also, I think it's also just sort of understanding, as I've gotten older, like my investment philosophy has also evolved, right? And so
Yeah.
at the time, it's also like if you're going to do these sorts of things, it sounds simplistic to say it now, but really you have to understand that like to really make this work, you need like enough money to deploy into like 30 or 40 companies, right? And if you can't
Oh,
do
yeah,
that and you don't
correct.
have the follow on, then this is not, sort of like these early stage venture bets. You either need to make a lot smaller bets and make a lot more of them, or just not do them at all because the numbers aren't going to be stacked in your favor at the end of the day, right? If you only do like 4 or 5 deals, and you're going to try and figure like hope like one of these 4 or 5, and in the early stage, you're going to come out and like give you like those outsized returns that you're looking for. It's
Can I
unrealistic.
clarify? So can I clarify? So what you're saying is like you were investing in a style that was meant to be more high quality, lower volume bets, but you were investing like on as if you're supposed to take many bets instead, but at smaller sizes. Is that correct?
So my initial thought was I was investing in things that I understood, right? So like my background was in
Yes,
e-commerce. I would make, I understood like what numbers should look like, what are the drivers of success, and like where I can potentially add value, right? So I feel like there were 2 functions there. One was, being able to use my experience to filter out some of the worst performing deals out there, or like to filter to do 1 layer filtering, right? And then the other part of it was to then be able to like sort of add value either as an advisor or just help out, just to because of the subject matter expertise, right? But then, obviously, like I did maybe 8 deals over the course of like 2 or 3 years, of which, the way that it's looking, maybe like 1 or 2 of those will pan out at like, marginal returns, but overall, like I'll definitely won't be the S&P 500 the way things are going now. Well, S&P 500 a year ago, right now,
a year ago,
it's a different story, right? So it's about I say this a lot. It's about trying to understand like what game it is that you're playing, like what's your best position to do. And at the time, I felt that sort of being more passive, but using my skills that I've applied, I could make that work. But the last couple of years, I realized that's not the case.
It sounded like
sense?
you blended.
I feel like
yeah,
it's a bit of a circular explanation.
Yeah. My interpretation is like you were investing. Like the way you should have been investing was like 500, which should have been smaller bets, but you were taking bigger bets, right?
Yeah, correct.
So the other way to do it would have been is to have less bets, but go deeper and do more homework, and be sure about when you're swinging, and that might have helped. The other way is just to have done way more bets at lower risk, at lower capital.
Yeah.
Right.
Yeah. I mean,
so I think it's either or. It's either or, and you were kind of doing both, like mixing it.
Yeah, I mean, I was trying to invest like a later stage investor with like assuming like to have better quality information, as opposed to like really recognizing that even despite like my knowledge base, that that wasn't enough to overcome the fact that you're still like an early stage investor and you have to deploy like an early stage investor. So that's
Dave, a quick question. I mean, as early stage investor, I mean, how important best experience is portfolio management?
What do you mean exactly? Like in terms of like assembling
what do you do after investment? Because a lot of the times that a company, I mean, is good or whatever. I mean, early stage, it doesn't really have anything defendable, right? I mean, so whatever that decides whether it becomes success or not is the decisions, the pathways, the execution they took. They take after the investment, and a lot of times that a wrong decision could lead them, I mean, I don't know, into wasting like 6-9 months and eventually lose out their competitors. So. So of course, I mean, as an investor, sometimes you are at a better position to understand the dynamics beyond just the operations of that company. So sometimes as an investor, you can advise the founders, but of course the company is run by the founders. So my question is that, I mean, how important is portfolio management from your point of view, because that eventually helps your investment return as well, and how do you navigate that dynamics?
So I think that's a really good question, right? Because it ultimately also, as you say, it comes down a lot to the founder and how open the founder is and how much of your feedback or input that they want, right? Because I mean, if you think about it, right, as like an early stage investor, like sometimes I'm board seat, sometimes I don't, sometimes I'm preference shares, sometimes I don't. Not actually, I always have preference shares, but ultimately, you can give your opinion, but you can't actually force them to do
Correct.
anything, right? And if you think about it, like as an investor, even as like a subject matter expertise, like ultimately I'm not a subject matter in the sub verticals that I'm investing in, right? The founder should
Yeah.
be the subject matter expert. Like if I know more about the business and the founder, then that's like a huge problem, right? So I think the value, honestly, like as an early stage investor, like what I found is like a lot of your value is like honestly comes down as like as a mental health professional. Like you're there to listen to people, you're there to bounce ideas
Pump.
off of. I mean, you can give directional advice, you can give feedback based off like what it is that you see in the market, what you see other people doing. You might have a bit more information because you see more decks. You talk to more people. You might be less myopic because you're not doing this 24/7, so you can provide a different perspective. But at the end of the day, right, you're not the person running the business, and that's always a challenge because each of these people, it depends on their personalities, right? Sometimes, like, you see someone doing something wrong, and you can try to push them into a different direction, and then it's a question of like how effective are you at pushing those people? And sometimes I'm pretty effective, and sometimes I fail completely. And I think again that goes back to being able to have a wide enough set of companies where even if like you have like one or two really obstinate people and they just really don't listen to you, ultimately that's still okay because then you still have like another 18 companies you can talk to and you can maybe push them in a better or guide them in a better direction, right? So it's all kind of like part and parcel of the game.
Yeah. I guess the other thing is you could think of this sunk cost fallacy, like trying to do a coup maybe not as good for a return versus finding a new investment deal. That's going to just be a lot easier to kind of go through, or helping your current companies that are doing well already, maybe. And it could be just part of the acceptance part, I guess, of going through the process, maybe.
I mean, you have to do both, right? Like, I mean, obviously you can't just focus. You always have to pursue new opportunities, and you always have to look into new things, and you can't just focus on like what you currently have. Right? And it's my perspective, right? But at the same point, I think it would be irresponsible if I just like sat around and didn't do anything and watched, the business implode, or not implode. I'm being a bit dramatic, but just sort of like, stagnate. Stagnate's a better word.
Well, put it this way: like at the extremes, you have like your 500 startups who has infinite number of companies. For their losers, they would literally have no time to think about that, right? Unless you're saying you have a way smaller portfolio and you have time where you're, it's quality over volume that matters. Then I think that argument makes sense, right? But
I disagree. Like I don't agree with you because I've worked with 500 before. So we have some shared businesses, for lack of better words, and like I've actually found the team at 500. It's one of the reasons why I really like the team over there is I found them to be like really supportive, regardless of how well the business is doing. Or I mean, obviously, if it's like a clear loser, like if it just really isn't going anywhere, then they have to manage the time. But like I think I've definitely had business go through some tough times, and I've found the team of 500 to be like incredibly gracious and generous and helpful. And even though, they have like huge companies in the portfolio, they have a lot of they have like Grab, they have all these big names, but even for like a small business that they, their stake is, I don't know, it's like single digits. It's single digits for sure, right? But I think like as a responsible custodian of people's money, of your own money, right? You can't, I'm not sure if it's, what's what I'm looking for? Not necessarily ethical. It's just the way I think it's just the way that you choose to do business, right? I get what you're saying. I think there's definitely the argument to be made that just only focus on the winners. Your time is best spent focusing on the ones that are doing well and not worry about the other ones.
It's a very fine line.
Yeah. It's hard. It's hard. I don't have like a clear cut heuristic for when you should stop and when you should start. Caring about these things.
Yeah. I mean, I think over time, if you continue this in your career, you probably have a better model and tools to kind of deal with that. And maybe in 5 years, you'll tell us exactly what it's supposed to be. So who knows? But yeah.
Well, I think I can tell right now, it's definitely the founder, right? It's really down to the founder's willingness to take and like actually take it, not just like listen to you and just be like, yes, that's really smart. Because I know I've done that a lot. I've definitely had conversations with my investors. I'm like, yes, you're so smart. I will do exactly that. And and then like after
And they go do something else.
you know, you just completely disregard. So I'm guilty of this on the side. I know, but it's really like you know, be able to take heart, you know, and like have those hard conversations and like actually be heard. They don't actually have to listen to you at the end of the day, but they should at least really hear you, right?
Yeah. It's closer to a partnership, especially early stage, right? And I think for the companies I'm looking at or have invested in, it's really close friends, and it's just really you're having normal discussions whether you've invested or not, you know, as a friend, just to help them along their journey. And you know, it's like you said, you could have that discussion, but it's up to them at the end of the day. But I think I would tend to look for people where you could engage in that way. You know, if not, there's really no point of the relationship. It's just money, and then. And of course, like you said, it manifests in so many different ways, whether it be mental health, whether it be pumping them up, whether it be really, you know, sounding board or jamming or whatever, right? And I think ultimately, from my interactions, typically founders are quite grateful, and it cuts both ways. As an investor, you learn a ton too, right? So it's having that kind of healthy relationship and balance you want to kind of look for in the deal, I guess.
I think in 5 years' time, what Dave is going to come back and tell us is not really what would be the industry formula or whatever. Is what has worked for him or what has not worked for him, and whether he has enjoyed the process along the way.
No, of course, yes, you're right. This is not meant to be prescriptive, right? It's like you know, everyone's journey is their own. Yeah, that'd be great.
You're right.
Yeah,
that's a good point. Good insight. But then, what about anything about the day job, or is just your mind's been preoccupied with the portfolio?
No, I mean, the day job's been busy, but I'm also, as I'm not sure if I told you, John, but I'm in the process of like raising a small PE fund in the US. With it's nothing super interesting or super innovative, but it's essentially like value add industrial real estate, and it's going quite well. So I think we'll have the fund closed by end of this year. We have commitments from anchors. So it should be quite productive.
Congratulations!
And that's part of the reason why I'm going back to the US. I'm going back to the US for 2 months to sort of like potentially finalize some of these things and close things off, and you know, dot I's, cross T's. Yeah, you know, show my face.
Yeah, sure. I'm a real person from this region.
Yeah, I'm a real human being. I'm not I'm
one of you
AI
guys.
Generated, not an algorithmically generated avatar.
Yeah,
real human.
Sounds promising. Anything else you want to
talk
integrate?
About markets?
I don't know. It's up.
Any other questions, John?
Are you done? Are you done interrogating Dave? Are you satisfied with his answers?
I'm satisfied that there's a timetable. In 5 years' time, Dave is going to tell us exactly what happened. So yeah.
Yeah,
yes,
and he's going to be a real. He'll be a real estate mogul too by then. We'll see.
I mean, yeah.
I mean, but that's like an interesting thing, right? Because you have to like ask yourself, what are you doing this for? And I mean, I feel like if you're doing it, you really have to like what you're doing, because like there's so many easy ways to make money. I mean, it's not easy. It's all work. I don't think there's any real, well, maybe for the 3 Arrows guys, but it's all like hard work, right? But like there's less complicated or more, there's paths of making money that are more straightforward, and they're tried and true, and you don't have to like solve as many problems as you do if you're to start like a tech business in Southeast Asia, right? And I think a lot of people are not necessarily honest with themselves about why it is that they're starting businesses or why they want to be, you know, founders.
That's true.
Absolutely. I mean, this year I had a couple of launch chats with a friend of mine who went to build a business in Indonesia, raised I think tens of millions of dollars from very notable investors. He finally gave up in January or February this year. But when I was asking him what's the biggest lesson, he said never start a company because you're opportunistic, because the chances are, I mean, if you're completely going the smooth path and all the way until exit or whatever, that's fine. But mentally, if you're opportunistic, whenever there's serious hardship that's coming your way, it's very easy for you to say, let's call it a day, let's just give up. And he said he was already quite strong because he had a few of that instances, and he actually carried on for more than 2 years. But he said, I mean, a weaker founder would have given up like long ago.
Yeah. No, I fully agree. And as like again, not too prescriptive, but as an investment heuristic, never invest in people that are opportunistic. It's the same applies.
I feel like that's a very common theme, or like that story is a dime a dozen in the region, wouldn't you say? You come across people. I mean, like that's how the region kind of emerges to, something big happens and people copy. So and I guess maybe that's part of every market, I guess, right? So, I don't know. That's very hard to, yeah.
Just today, I had a lunch with somebody. I mean, coming down from Hong Kong from a very notable fund, and one of the fund whose names you always hear in the press in the US. But he has been in Singapore for a while and meeting all the funders, meeting all the VCs, and I asked him, "What's your biggest takeaway?" And he said everybody has been suspiciously optimistic.
Yeah. I think very few people want to do the homework or take the time to really have a position that they've, it's either authentic or a real opportunity that they've come across. They're trying to manufacture an opportunity, right? So it's hard. It's hard. It's really hard work to, either be an investor or a builder, to be solving part of problems that really are, meaningful. So, and I think that's, if you could find one slice of that, that's an edge you could hold on to and hopefully profit from. But I think more often than not, it's just not going to turn out the way, even if it does start meaningful, it could also still turn upside down and not work out too, so it's just a hard game, so it's like Dave says, I think you got to love what you're doing, man. You got to really love it.
Shall we talk about topic or shall we interrogate Alex?
Oh, you could ask anything you want. It's up to you.
You try. I've tried to interrogate Alex for the last 2 months. Hasn't got me anywhere. So maybe you'll be better at it.
Well, I wasn't around the office too often, so.
No, you do it, Junggan.
Well, me and Junggan, no, we talked a little bit, Junggan. So Junggan knows a little bit. So, but you can ask whatever you want.
What are you going to do for the remaining quarter of the year? Assuming now it's more than half of Q3 now.
Yeah, I've been in. Well, I don't know. The past few months have been really rough for me because I was just not in a good place mentally, and so, I'm not sure. I don't know. I guess I'll try to leave us little details, so it doesn't drone on. But yeah, just wasn't in the right headspace to have a routine and discipline. And that's something that typically I find people will externalize to a job of sorts, right? But like when you don't have that, it's very easy just to fall prey to everyday things that are like distractions, and you get addicted to social media, TV, all this kind of shit. So. And then, it was like a depressive loop of sorts, and then I was stuck in that for most of probably, quite a few months. Because before that, we were consistently creating content and this kind of stuff. And then, there was a lot of traveling, so you don't have time to process all these things going on. But then, eventually just get tired of it. So, and then start to build a small plan, start to build, an idea, small goals, every day start achieving them, having a better routine. So now it's just, I'm in a good place where I have a good routine and I have my small goals. I don't like to talk about it too much because in the past, you talk about it. Yeah, you put it out there and this kind of stuff and you look stupid if you don't do it. But lots of times it doesn't actually help, right? So, if I could tell you all my ideas and plans, but then it might not happen and I feel even stupider too, right? So, but to what I can share is that I know that I would like to have a much better clarity, and I'm now taking the time to, understand the space that I'm working in, which is, media technically, and then, what that actually means and how either I could build a business around it or even continue as a thesis to invest. So, if I'm going to continue to do early stage investing, I want to have a foundation where I'm actually have a framework and substance to work against versus typically meeting a bunch of founders. Kind of like, I don't know if that was your experience, Dave, in the past, like if you had very clear ideas around investing or if it's kind of just opportunistic, come meet them, you kind of use your logic and IQ to kind of navigate what the problem is, what the market is, and then you make a bet. But I would rather have, some form of an idea of, or a process, try to build a process to have that down so that something, instead of it being very random and then it turning out later that you learn from the mistakes instead, which are very costly at this age, I think. So my days have just been mostly, having a good routine, doing a lot of reading, doing a lot of writing, and hopefully it manifests in the coming weeks and months towards something that I could use towards a business plan. And then once I get the business plan down, then I think it just starts getting easier and easier to go forward. So the rest of the year is just probably getting to the point of manifesting a business plan. Then early next year, executing on it, where I have a lot more clarity versus saying early in the year I wasn't even in the right routine or headspace to when I made those claims, it just wasn't going to happen. Absolutely wasn't going to happen. So now though, I have a more disciplined mindset. I'm actually acting on it. It's showing up in small results, and that's what it is. So I'd rather keep it a high, vague level. Because I think it's pointless to tell you in detail because it may or may not happen that way. And it may change because I'm still in the process of doing it. So yeah, I don't know if that's satisfactory or very circular.
Not sure whether it's satisfactory, but I think it certainly resonates with. I think I went through this kind of sort of mental uncertainty about 3 times since 2013. Before 2013, I mean, I was doing INSEAD. Before INSEAD, I had a job. So afterwards, I mean, I was always like building ventures, running things, and sometimes it's just hard. Sometimes I mean, there's nobody there to guide you, saying that, hey, just follow this path, or just follow this instructions, or just follow this process, or just follow. I mean, I don't know, follow this great personality. So everything's on your own, and it has not been smooth sailing for me, at least. So there are times you doubt by yourself. I mean, my worst record was like over 3 months of time. Despite eating voraciously, I lost 6 kg of weight. So that was the worst. I mean, not nice, but that was the worst mental period I ever had. I mean, lasted for about 3 months, and somehow it just got better. I don't know how it got better. It just one day I realized, shit, I'm in a new phase now, which is good.
Yeah, correct. Well, and I think that's the hard part, is to even put it out there, because it's embarrassing, dude. Like, honestly, if I'm going to be honest with you, most of the year, early in the year, in between doing podcasting loosely and editing backlogs, it's nothing. Let's call it what it was, man. And I think that's fucking hard to tell people. People have these expectations on you, and you're trying to live to those expectations, and then, you get in your own head. But the truth is, you got to start just like you always been doing, executing. So I don't think you probably, well, it's kind of nice to hear that you kind of have those problems, but you still execute while doing that. It doesn't really fully stop you, I guess. Or I don't know how that manifests for you, but Dave has a nice framework. He has a very good schedule. He does have a job, so it keeps him accountable too, but he still manages his other work too. He's raising a PE fund, and he has early stage investments, right? So me, it's even worse though. So it's kind of shitty, but it's, here we are now. I think we're getting back on track. I hope so. Again, that's why I don't want to talk about it too much, but I just rather just do it, and we show up every week with an episode. Every week we show up with better content. And the product improves, it manifests or something. I'd rather just, let's just do that, so that I talk about myself.
Let's do it.
Do the work. Yeah, do the work. Agree.
Yeah. Shall we talk about the C's financial reports? If you guys have read it,
we can talk about one thing. I got one thing to go at 5 p.m. So we have 20 minutes to talk about it. So yeah, since Dave read about it, about it, I can develop an opinion about it. So what's out to you, Jiangan? What was the first thing that you want to point out from C's results?
I mean, so today is the 17th, right? So he did it come out like last night or something?
See? No, it came out like 2-3 days ago.
Was it? So I only got a chance to I think it was yesterday. Yeah, but anyway, so I only got a chance to take a more detailed look this afternoon, and it doesn't seem to be very good this particular quarter. So and you see the digital entertainment part, the paying user numbers continue to drop. So we have been hearing rumors here and there saying that okay, there's new game in the pipeline, developed largely, I think, with Tencent, but and it was supposed to be launched in April. It was supposed to be launched in June. It was supposed to be launched in August, and so far it hasn't been launched. So I don't know exactly what's happening with that. It could be that okay, they did some small taste, and the user feedback is not as good as they expected. And of course, I mean, you launch a game which doesn't have satisfactory testing results, would probably be a disaster. I think that you might know this sector better than I do, but that part, I think it's kind of worrying. So the e-commerce side, there's been this long debate that, okay, when will e-commerce in Southeast Asia hit a plateau, and especially Indonesia, because I mean this is where people have bet lots of money in, and this is where I think TikTok has been sort of spending lots of resources at as well. But there's one thing we kept hearing from people who are experienced e-commerce operatives who worked in China before but are from Indonesia. Everybody is saying that, okay, there's a big supply problem. There's a big supply problem. At some point of time, you're going to hit this ceiling because you don't have enough supply. And so maybe this is something which is starting to manifest. And of course, I mean, recession, the commodity price sort of cycle, etc., which you might have seen in the second half of the year, and how that exactly impacted e-commerce performance. I think it's highly uncertain, but the fact that the management doesn't really give a guidance or sort of did they rescind from their guidance, or they just refuse to give updated guidance? That's not a good sign.
Yeah.
That's not a good sign.
What was your take, Dave?
Well, I mean, so many things. I think the digital entertainment segment part of it, I'm looking for the actual the data here. So I think this one is actually quite interesting if you look at sort of their business model, because the biggest game is Free Fire, right? And Free Fire is a free-to-play game, and so the typical conventional wisdom around video games are recession-proof, because if you think about a traditional like AAA title where you buy the game up front for like $60, it has very high value in terms of hours of entertainment per dollar spent, right? If you buy like a AAA game these days, you can spend easily like 100 to 200 hours playing that game, and you bought it for like 60 to 80 US dollars. So in terms of like value for entertainment, it's very, very good. But then you have this issue where
that's traditional games, right?
Yeah, I'm getting to that.
Okay.
Yeah, that's a traditional AAA game where it's not a pay to play game, right? Whereas something like Free Fire is, the monetization is off like cosmetics, right? And so I think that's the thing, is like when you have a pay to play game, that heuristic no longer applies. So if you look at their numbers, their quarterly active users, it's on like slide 5. It actually went up a little bit quarter over quarter. It went from like 615 million quarterly active users to 619. I mean, that's still down year over year. But if you look at quarterly paying users, that's where it really drops off a cliff, right? It's gone from like 6, it's down. So just to be clear, for those of you who haven't seen this thing, quarterly active users is down 15% year over year. It's actually up quarter over quarter, whereas quarterly paying users is down 40% year over year, and it's also down quarter over quarter, 61.4 million in Q1 2022, and it's 56.1 million in Q2 2022. So what that really means is like this. I think there's a couple things happening here, right? It's like, we're going through sort of two things that are, I think, macro headwinds for the digital entertainment business. There's actually a lot more, but the two ones that stand out the most right now is one, obviously, things are just a lot more expensive. Like everywhere you go, you see reports about inflation, belt tightening. Basically, inflation is a big topic that I don't think is very hashed. So, when you have a game where you can play for free and you don't have to spend any money, there's no incentive to spend money on this thing, right? So that's one part of it. And two, as like sort of markets are opening back up, people are traveling again, and we sort of talked about this, right? There's, you're facing macros, like there's more things to do, there's more things to spend your money on. So I think, even if they were to launch like a new game, that game would it's still going to be a challenging environment for them. And that's kind of an issue because, this was their cash cow. And if you look at their, their EBITDA, their adjusted EBITDA, which is, a number that I hate, it's 50% of what it was. Speaking English, everyone, but still, like their adjusted EBITDA is 50%. For their digital entertainment segment, is 50% of what it was in Q1, which for me is very, very bad news. So for context, it was 741 million in Q2 21. Sorry, year over year, not quarter over quarter. And Q2 2022, it's only 333. So that's a significant decline.
How do you think about the e-commerce part?
I need to go back and look this. I think their e-commerce is. It looks like their cost of revenue is going up for e-commerce, and it looks like essentially it's still a game of subsidies. I don't think. I mean, I know this is very repetitive because I think we say this every time we talk about this particular topic, but I don't. I don't see us getting past like this subsidy game anytime in the near future. And then their GMV and gross orders growth in terms of is pretty marginal. So I think there's a couple things going on, right? I think I remember like reading a couple months ago that Alibaba had just committed to a fairly substantial. They basically, I don't remember what they said. You guys remember this? Where they said like we're committing again to Lazada in Southeast Asia. We're going to invest like
that's quite old.
billion of dollars. But we haven't talked in quite a long time, right? So
Yeah.
I don't know if it was this year, was it last year?
It was this year, but it was before we stopped.
Before
I think so.
Before we stopped. Okay.
I think so. That's quite
I
old.
mean, I guess the frustrating part about their e-commerce numbers is it doesn't break out like which markets they come from, right? Because between the last couple of times, between this report and last report, they've obviously shut down some of their markets, although I think those are quite marginal.
Yeah.
But also based off like what I can pick up from their earnings call, it seems like Brazil is growing quite nicely for them. So it's hard to really get a clear answer from like these like top line numbers. So
does e-commerce exclude Shopee Pay and Shopee Food?
I think I think it includes Shopee Food. I don't think it includes Shopee Pay. And I don't know where, because I know that they have a fairly large sort of buy now pay later and consumer lending business. I don't know where that is hidden in their financial reports. I mean, I've tried to dissect that. I couldn't find it.
Well, I've been under the rock for the past few months, but I recently went out and talked to some people who have friends working.
Like the Monkey King under the rock.
Yeah, I was like the Monkey King. Yeah, but like I don't know if this was in the news, but the people were telling me that their friends were working on pay and food. They had cut, like locally at least in Malaysia. I don't know if it's across the board in other countries, but they cut a substantial amount of employees in Shopee Pay and Shopee Food. So this is anecdotal.
That was in their 14th of June layoff. So they cut off. I think they cut off Spain. They cut off. Was that the market in Latam? I can't remember. But they cut.
Well, I'm saying they cut staff. Like I don't know about markets, but yeah.
They cut Shopee Food and Shopee Pay in a number of markets, including I think Malaysia and Thailand specifically were highly impacted. But you can't see the impact in this quarter result, right? Because they made a cut in June, plus the compensation or whatever. So the June cost would be actually artificially high. But in this quarter and in the second half of the year, I think the cost should be lower than the last quarter. I mean, I'd be really surprised if it was not. Yeah.
Well, to me, what the most interesting thing is that like when we were talking about Shopee last year, it just seemed like they were an unstoppable force. They were just raising too much money, like crazy amounts of money. I don't know if they're like levered now with debt or not, but like they had so much cash balance. It just seems that within, a quarter or two that completely flipped on its head. It seems uncertain now, right? Like the thesis we always had was saying that gaming was going to support the e-commerce until e-commerce can become profitable. It seems that they have both two questionable hands now, right? And I guess that really manifested in the stock price over time. And I don't know, I haven't checked the price recently. I don't know if it's still down, but it just seems it's just crazy that so much could change. Like everyone was so bullish back then. They were trying adding to positions of their C stock, right? Are you guys still holding on to your C stock or?
Well, I just want to be upfront as I was not that bullish on C last year. Okay. Just for the record.
Oh, you were?
For
really?
the record.
You sure?
Yeah, go back.
Okay.
Yeah,
Okay.
To the old episodes. I was not. It's like
It seemed more of a sure bet of where to put your money. And I think what Andrew said previously, right? Like it made sense the rise because there are very few bets you can make on Southeast Asia, right? And I think that was his thesis for Gojek and stuff. But so the early rise makes sense, but it seems that the performance is showing through now, and this is the first test with the recession, right?
I think Andrew was optimistic about every company in Southeast Asia that when listed, and
Correct.
I don't
He was.
I don't know how many friends he has in each company, but he was very
He
optimistic.
has lots of friends.
But
lots of friends.
But then again, this year a lot of things changed, right? So a lot of the thesis that you could use last year and doesn't apply anymore. So I mean, capital cost of obviously has gone up. And also this violent swing of commodity prices, they impact the economy, they impact people's spending power, they impact how the government is regulating things, and of course it's always like people talking about it in the news saying that, oh, this is going to impact this is going to impact that, but the truth is that you don't have real-time data, you don't know how the impact is until much later. I mean, even in the US, you're talking about recession. Is there recession? Is there not a recession?
So I mean, it's I like what you're saying because back say last year when we were talking about these topics, Dave always seems like he's the a-hole and he's just throwing a wet blanket on things, but it speaks to fundamentals, right? Like you should be thinking fundamentally and not trying to going with the what's hot and trending because technically everything you said should have been looked at when we were discussing those topics, right? It's just so easy to get caught up in the hoo-ha about it, and it's great for Southeast Asia, it's a champion, blah blah blah, but still, and I think that's where public market investors shine. That's their job, mark to market every day, right?
Yeah.
So but I think and after seeing a few cycles, you start to realize like everything that people were saying 10 years ago is coming back in fashion again. Like smaller valuations, more sane deal sizes, longer times to make money. It's just cyclical. It's a few years ago, people weren't saying this at all.
I think these companies know that, right? I mean, both C and Grab have a lot of cash, and even some of the private companies in that growth stage, they
Is that
raise
still true?
more cash.
No,
It is still true. It is still true.
C does.
The question is that
Grab, I don't know. Yeah.
Grab had like 7 as of last
thought it was
quarter.
less.
I'm not sure about this quarter.
really?
I think
But didn't they lose like $2 billion last quarter?
Oh, yeah,
Or
I
this
thought it
quarter?
was, yeah.
last year, yeah. I mean, you can't lose 2 billion like a quarter, or no, I can't remember the exact results,
Yes, you
but
can. Yes, you can.
It's been proven.
yes, you can. What are you talking about? You definitely can lose $2 billion a quarter.
but let's see. I think Grab is going to announce their results in about a week's time. So let's see. And but interestingly, today I already see lots of people who are trying to move positions on Grab based on these results. So yeah, let's see whether they make the right bets.
I don't know, man.
I don't know. I feel like the All In podcast actually did a really good job of describing this, right? Because there was I think it was 2 or 3 episodes ago where they basically were talking about like the difference between, I'm going to do a really bad job explaining this, but like the difference between like understanding how much of performance is market alpha and how much of performance is market beta, right? And then basically over the last 2 or 3 years, last 6 months notwithstanding, right? Basically everyone that did really well was like, oh, it's because I'm so skilled and I'm so good at this and blah, 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 blah. But in actuality, it's just because the markets just all kind of went crazy because there's just so much money that got pumped in and people just, I kind of forgot. maybe it's not your performance, right?
Yeah, correct.
And if you listen to the latest episode of All In last week, and at some point in time, I mean, the tension became a bit high because they said, I don't know. I mean, we've been talking about recession, we've been talking about interest rate. What's the impact of economy?
Oh, yeah.
What's the impact of that? I don't know. I mean, I really don't know.
Good. I haven't gotten there yet.
Yeah. I guess that's like my take on it. Is like I think it's like I just feel like the last 3 or 4 years, right? All these stocks, like the performance in terms of the market cap, I don't think we're really driven by any fundamentals. It's just frothy market sentiment. And now that I think the tide's gone out, it's like the airport has no clothes. Yeah. So,
but I think a very interesting insight was that for our quote unquote VC industry, right? Say 20 years ago, that might have been not have been the case, because I think the alpha might not have been as correlated to the market, because it was on a much smaller scale, and it was probably like, those were like the early generation tech companies defining, right? They were actually building material fundamentals, right? But it got to a point with QE where this money squeezed into the market, and then eventually the asset class starts to correlate with the market too, right? So it's just like the mindset follows, and they're investing with the trend, right? And the money available from QE became that. So it just is more relevant for industry now because of the ties to it. So, but I don't know.
I'm not sure that's the diagnosis. Like, I just, like, the way I look at it, and the way I looked at like what's happened in the last 5 years, it's like basically all these people that were doing VC kind of just threw the traditional VC model out the window and said we don't need this anymore, right? Because like typically VC, it's what's I'm looking for? It's performance based, right? You raise a little bit of money, you show some traction, and then you go raise a little bit more money, you show some more traction, you raise a little bit more money, you raise blah 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 blah. The cycle, right? It's performance based. Like every 18 months, you raise incrementally more based on how well you did based off the last amount of money you raised. And there is like, what's the word I'm looking for? Responsibility, or there's, it reflects, it ties to reality, right? Whereas in the last couple of years, basically everyone's like, oh, no, it doesn't really matter, that you have no revenue or you have marginal revenue. I'm going to give you $100 million anyway, right? Yeah. So they just threw what was like a tested and, it was a good model. The model worked, and they just kind of ignored it completely. And that's kind of, I think that's what we're seeing here.
Yeah, and I mean, I think it's not to say like that necessarily hasn't worked. It has worked for some people in some deals, and some companies actually have materialized from that. It's just that the majority are not going to, right? And as like you said, the logic follows, and then now we are where we are currently. So, Jangan, do you have any final thoughts on C results then before we close out?
I think back to the argument about market alpha versus market beta, and I think same for the companies, right? I mean, a lot of times that what you do and you do the right things, the market tide would bring you up even further, and even if the things you do are not exactly right, and when things go down, it's test the resilience of how you can sort of adjust your business model, but at the end of the day, I mean, recently we've seen lots of people coming to Singapore, and lots of people are like bullish about Southeast Asia, the long-term prospects. If you look at the global geopolitics at the moment, which we can talk about in the next episode because it's really, really fascinating what's happening now. So definitely there's lots of money loitering around for Southeast Asia, but exactly how is that going to translate? I mean, how the businesses are going to take advantage of that, and what exactly are the opportunities, and how are the big players which still have lots of cash not waste this opportunity? So these are all the things which are worth sort of discussing and observing. So but on a positive side, have you guys seen Mercado Libre's stock price? It's back to 1,000.
Oh, I didn't know that.
Yeah.
That's, I guess something good must be happening in the performance then.
I think there's still a bit of a bullishness in Latam. So, but we can talk about that another time, and along with my book.
Oh yes, let's do that next time.
Oh yeah, your book. Yes,
we'll do your book. Yes,
by the way.
Everyone go buy Jangan Lee's book. What's it called?
Seeing the Unseen, which makes it look like a religious book, but seeing the unseen behind Chinese tech giants' global venturing. So we did that during the pandemic when we were stuck at home and we sold the company. We didn't know what to do. So I was working with the Professor Guoli Chen of INSEAD. We interviewed a bunch of people from about 20 companies who used to work or lead their global ventures. And we'll talk about this next time. But I think we have some interesting findings. I mean, a lot of the times things fail not because of the reason that you think they failed.
All right. Excited to hear about it. And where can they buy the book?
Amazon. Pre-order has started, and it will be shipped out of the warehouse on the 21st of September.
Yeah.
In the US.
All right. Looking forward to getting my
How
copy.
do we get a signed copy from you? I want a personalized signed copy.
Buy a copy, then come to Singapore.
All right, you got it, buddy.
Okay, fine.
Oh
fine.
shit! I think I bought the electronic version. Oh man.
Yeah.
I gotta get a physical copy.
You guys need to come to Singapore at some point in time. I mean,
I'm
there are
coming.
lots of
I'm
things
coming
happening.
the 6th to the 9th. I'll be there. So if you're around, I'll see you.
Okay. Yeah.
All right,
Noted.
guys.
Okay.
Okay.
Glad to have
Thanks, guys.
everyone back. It was good.
Yeah.
We were there with you, buddy.
Holy shit.
So Jangan
Did
came
you
back and he was
guys
like,
go to-
Yeah.
Yeah.
Oh.
That was creepy.
But do you want me to change my? Do you want to come back and change my input to this thing? Because otherwise, it doesn't do anything. Because I think my input is
Oh.
my headphones.
"Is it? I don't know. It sounds okay. It could be. Yeah.
If you're,
No. You should be
you're
able to
okay
change it
with
from
it,
here
then-
from your settings. Oh, you can't change it, huh?
I tried to
I
count.
can't.
I
It's
mean,
great. It's grayed out,
Oh.
I think you just
and
get
I
out
can't
and,
leave either.
So
Yeah.
what
it
I
won't let
did
me
just
leave.
now is that I closed the window and I got back, so it's pretty quick.
Oh, okay. Okay. Yeah, maybe you can do that.
I'll just do that. All right, I'll do that.
So you can dash off and dash back. I heard the
All
dashing
right.
sound.
Did you see Andrew? He replied to you.
Did he?
That fucker replied to you, and then he's not joining. He likes the idea that you have an investment team that he can use, and then he's like, by the way, it's not in my calendar.
What did he say about the investment team? I didn't say it.
He replied. He replied to what your comment. He's like, nice.
Oh, okay. Anyway, so yeah, we released the bubble tea report yesterday, and it was picked up by multiple press outlets. So apparently, it's a topic that everyone loves.
You guys are like grinding out reports like a mother, man. It's just crazy. I can't even keep up. How big is the reports team now? Is it still just Vion?
No, more than that. I'm not sure about the reports team, but look at Slack now. We have
Okay, how about now?
people on Slack.
Good.
Chuck,
20
Chuck, can you hear me?
Yeah,
Well, 28
Hello?
members on our Slack.
Can you
we
hear
can
me?
hear you. We can hear you.
There's a bit of lag, right?
Are you guys talking? Because I can't hear you.
Yeah, we're talking. We're talking.
Okay.
Jangan, if
Hello?
you have people who want to watch you, we can invite people to the backstage now, and they could live chat with us in the future.
People are working.
I'm just saying in general.
Oh.
Okay.
Oh, so
I'm not saying your employees either.
Oh.
Maybe your mom wants to join.
My mom doesn't understand English. Actually, does
Well,
she
she-
understand Mandarin? She might not understand Mandarin as well. So
you say
Where's your
hello?
family based again?
80 kilometers from Shanghai.
So the dialect is not Mandarin?
It is. Well, I mean, according to linguists, it's transitional between Mandarin and Shanghainese. So it has elements of both,
Holy shit.
which
and
means
she's-
that speakers of either couldn't understand us.
So she's speaking only dialect. That's amazing.
Well, that's what people were. I mean, back in at least before 1960s. I think she understands Mandarin, but she doesn't speak it.
Oh, okay. Is Dave? Is Dave? Is he typing to us?
I think he's typing.
No, I'm just waiting for you guys. You guys having a
Oh, I didn't know you
conversation.
could hear me. I didn't know you could hear me. I
think-
was
yeah,
waiting for
no,
you to
I-
be like, I'm back.
I can see his massive
No,
hand.
No, we were talking
guys
about
just-
bubble tea, and somehow it devolved to Jangan's mother not speaking Mandarin.
Oh, are we starting now? Is it? Are we going to go? Is it time?
Okay, sure. Let me just
Should we
start.
start? Yeah.
Yeah.